Welcome back. It was a full trading month in May. Aside from Monday, May 30, that was declared a holiday to mark Democracy Day, which was on Sunday, May 29. And this month, the Debt Management Office held a bond auction, while the Central Bank of Nigeria kept liquidity in check via primary market auctions and open market auctions as well. The equities market also had its share of bullish, bearish and brutish movements. But what actually drove investors' sentiments this month? Ayodeji Olabisi, investment analyst with Meristem Securities Limited, joins me now to talk about this. Good morning to you, Ayodeji.
Good morning.
It's great to have you on the program. So, talk to us. The month of May was kind of an interesting month, considering, that we're coming from a rather brutish month of April.
Yeah. Like you said earlier, month of May is actually one of the months that the stock market has actually recorded its best. For the first time, we actually saw the stock market going to a positive position of about 0.91%. So far in the year, the market has been bearish, and the year to date has actually been negative until we saw last week. And for the past 3 weeks, we've seen the market has actually been bullish. We've seen some positive returns, and month to month, we've seen the banking stocks, in fact, all of the counters have actually provided positive returns, say for the insurance that came up with about 2.2% positive. The banking stock month to month rose by about 28%. And before now, the stocks have actually been probably hit by the market when we saw a lot of sell-offs, and we saw the likes of fundamental stocks like GT and Zenith going as low as 10 naira, 13 naira.
That caused to be a lot of perpetuation for investors.
Exactly, that was really bad. And a lot of things were happening. The FX market was not clear enough. Foreign investors were actually exiting the market. And the foreign investors, you have to know, they own significant share in all those counters. But I think from the positive news inflow that has been coming in lately, we saw the flexibility which the MPR is trying to consider now. That has been able to boost investors' confidence. And given the fact that banking stocks are always going to benefit more when you have FX flows, when you have those flexibility in their policies, given the fact that a lot of banks have their assets in dollar-denominated funds and euro-denominated funds. So when you bring that, looking at it relatively, you find that the banking stocks are going to benefit from that. And we think that those are part of the sentiment that have actually driven investors, and we saw there was bullish on actually all the counters around it.
So it also, I need to ask this question, because this was like a month when the MSCI Frontier Markets, Index, issue came up,
Yes.
About excluding Nigeria's stocks from it. And in spite of that, we still see quite heavy performers, at least for the top 10. Tiger Brands was one of the top performers that we saw. The banking stocks, of course, were also there. Then we saw a little bit of mix of oil and gas stocks as well.
Yeah, actually, that was actually pretty interesting. For Tiger Brand, you need to understand that the new structuring in the company, after the paying off of their debt and, the big name came in, Dangote came back into the market, there's already this sentiment about the company. There's this know-how, there's the technical know-how about the group entirely. And the performance across stock counters also in all departments, looking at it from the industrial to the consumer goods, the Dangote sugar and the likes, they've actually been performing well. So I think this has been able to boost investors' confidence that coming back into Tiger Brands, that is also going to help the counter perform, and that is why we've seen a significant appreciation in the counter. I think the counter is actually appreciated by 369% year to date, and that is actually massive. For the oil and gas, you need to should I call it the partial deregulation, as we call it, the revaluing of the prices. The guided regulation, as we call it. And we've seen that has actually boosted the confidence of investors in that segment. Also, when you consider that relatively you expect their revenue now, their turnover to actually be higher, comparing at 145 before you look at it at 87 naira. Definitely, that is going to have a positive effect on their top lines. And if that should translate in their top line, their cost line might not be really significantly different, even in terms of the FX difference. And this should also translate positively on their bottom line. If this translates positively on their bottom line, they have fantastic dividend payments, and that is also one of the factors that you see that.
And investors will be smiling.
Exactly.
But then, were investors smiling so much for the fixed income segment of the market? Because, for the month just ended now, the Debt Management Office sold about 105 billion naira worth of bonds, reopenings of previous bonds.
Yeah.
And the yields were not as, impressive as a lot of, analysts had actually expected.
The fixed income market was a transpiration between what people were actually expecting, given what happened in the last MPC. While we saw the inflation level rose to about 11.37% as at February, the MPR as at then was around 11%. And where the MPC came, we saw the MPC jacking MPR up to about 12%. A lot of investors actually felt this trend was going to continue. And by then, when the MPC was coming, before then, there was a March inflation which came out around 12.7, 12.8, and there were no significant reaction because there was nobody to push these reactions to. But while the MPC was coming and the April inflation came out and was about 13.7%, a lot of investors were expecting that the MPR was going to be jacked up also. But slightly before the MPC meeting, the GDP result came out. And while the GDP result came out, there was a contraction in GDP by 36 basis points. Definitely for a country that wants to grow, and we're actually pushing domestic growth at this moment, bringing MPR to as high as 14% will not actually encourage domestic growth. And I think that was one of the things the MPC had to consider, and they had to peg it at that. I think while the result came out, investors were already factoring in that result into their expectation. And from then, we saw that from the 18th, we saw the yield environment started trending southwards because it was preferable for investors to take advantage of the high yields in the market at that period, given that if MPC should sustain, which they actually did, MPR at 12%, we expect there should be a bullish demand for yield, for bond and treasury bill instrument, and that will definitely impact negatively on yields. And
so
that is what has happened.
So in all, would you say that the month of May was a good month?
In all, I think for both the fixed income and the equities market, I think it was a good month because even in the fixed income market, you found out that yields trended as high as 13%, about 13.7% on the average for that period, coming from an average of about 12%. So for investors that have actually benefited 13%, I think it was actually also interesting.
So that's for the equities, bills, and the bonds. What about the FX market?
The FX market also, we saw the OBB and the OVN rates were actually trending northwards also, and that is, you always tag that to the liquidity in the system, because there's been scarcity of liquidity within this Apex Bank has actually been trying to manage. And while you see all that coming up, there's always going to be transactions, investors always looking for fund, and we've been sending into transactions between the banks. And due to the scarcity of liquidity, definitely UFX, you expect that trend to also go higher, which is profitable for the banks that have the funds to lend up.
So, just a quick projection, as we're still going to be talking more about it in the coming days, expectations for June. It is the last day officially for the month of May. What are your expectations for June?
For the month of June, I expect the short rally, I call it, because what we've seen so far is going to be a short rally from what we've seen in the equities market, the bonds market. For the bonds market, the fixed income market, we think yields might remain tempered within that environment because the government as it stands now is trying to push growth. Is trying to push development, and if that is going to come in place, there have been a lot of complaint about the CBN talking about reduced funds, credit to the private sector. More of the credits have been going to the public sector, and that has not really been able to boost growth because you find out the public sector is more concerned about, it has been more tilted towards recurrent expenditures before now. But now that it's going to start chasing the capital expenditure, we expect some credit to also go to the private sector. So if that actually transpires, then I think the yield environment might remain tempered for a period of time. For the equities market, we think that the funds that have been hanging will continue to flow in for the meantime, but that might be short-lived. And while that is short-lived, so I say we're seeing the market trading sideways by the month of June.
Oh dear. Well, thank you so much, Ayodiji, for coming on the program and, of course, sharing with us and reviewing the month of May for the markets.
Thank you for having me.
Ayodiji Olabisi is an investment analyst with Mary Sturm Securities Limited. And that's it on today's edition of the program. Many thanks for staying with us. You know, you can watch this program on youtube.com/channelsweb/Business Morning and leave us your comments as well. Have a profitable day. I'm Harriet Agbeni.